Let's talk about tax tables going up. Let's talk about the IRMA tax tables for your Medicare Part B. And the IRS is going to forgive some penalties for missing your RMDs. All right, folks, tax tables came out for 2023. So it's important to know what those tax tables are and what they're looking like. Obviously, there's some inflation and cost of living adjustments. As you know, we've done a previous video with Social Security is raising the Social Security benefit by 8.7%. But the nice thing is to look at what the tax brackets are going to be as well. So we're going to put these tax brackets on the screen so you can see this, where they were here and where they are right now in 2022 and where they're going in 2023. And we'll have the single brackets here and we have the married filing jointly brackets. I think some of the key ones are, I think that middle bracket or that top of the 12% bracket for singles is going up almost $3,000 a year, which is about $250 more a month. But when we look at the married filing jointly, the top of that 12% bracket is going from $83,550 all the way up to $89,450, which is almost $6,000. And we get excited about these little numbers because when we're helping people do some Roth conversions, that just gives you a little bit more wiggle room, right? A little bit more to be able to do some Roth conversions to stay within those brackets. But obviously, when we look at all these other numbers, you can see what they've changed to. I think it's very significant as we look at that next number. The top of that 22% bracket for singles is all the way going up to $95,375, and for couples, $190,750. So again, remember how these tax brackets work. Just because you land into that 22% bracket doesn't mean you pay 22% on everything. Remember, what's the marginal rate. It's what you pay per dollar in that bracket. So if you're only $1 in that bracket of 22%, you pay 22% taxes on that $1, but all the other brackets are less, right? So what we see is some people come in our office, we could show them in our tax screen or tax table screen, and we show, yeah, you're in the 22% bracket, but you're only averaging 11 cents on the dollar in federal taxes. So very significant. That's their effective tax rate. The marginal rate is what bracket you ended up with. So those are important because when you're looking to do Roth conversions, you want to find out where you're going to be at. All right, next we're going to talk about Medicare Part B. Remember, when you're on Medicare, Part B is going to cover most of your health care and you pick up a supplement or maybe you're on an Advantage plan. But remember, in retirement, when you're on Medicare, the more money you make, the more money you pay for Part B. And again, I say it's means tested, which means, that is based off your income. You don't get better health care, you just get more expensive health care depending on what income you're at. But these brackets are going up as well. And it's important to talk about because for some people it's important, maybe they need to do some Roth conversions to get their adjustable gross income down in their retirement years, for most of the retirement years, so they don't pay these higher costs for health care. Some people are paying double, some people are paying triple for their health care in retirement. So the nice thing about Medicare Part B for most people went from $170.10 to next year $164.90. So that's a savings of $5.20. So fortunately this year it's going down for 2023 because they overcharged everybody for this year. But here's the brackets for the IRMA tables. As you can see, for the individuals, the top of that, now this is your MAGI, Modified Adjust Gross Income. That's after your deductions. If your modified adjust gross income for singles, $97,000 or less, you're going to pay that $164.90. And for couples, double that, $194,000 or less, your MAGI, you're going to be paying that $164.90. For that second bracket, for the people who land as singles from $97,000 all the way up to $123,000, or for married filing jointly, again, your MAGI, which is $194,000 all the way to that $246,000, that monthly Part B premium is going to be $230.80. Now, these brackets keep going. The maximum premium is all the way up to $560.50, which is roughly about 3 times what that benefit of that starting benefit is. So you can definitely pay a lot more. Now again, there is a rule. If you have a change of life event, you don't have to wait 2 years, because for the Medicare Part B, they look back your 2 years tax return to see what your income was to determine what you pay for Medicare Part B. Well, what if you sold a business? What if you sold an investment property? What if you just had a big event there? You sold a bunch of investments or whatever it might be, and your income just happened to be high that year right before retirement. Well, if you had a change of life event, which is a marriage, a divorce, you lost a spouse, or retirement, you can do an amendment to that your Medicare Part B premium. The form is SSA 44. Download that form, SSA 44, from Social Security, fill out that amendment, and you won't have to wait 2 years to adjust that benefit. You can get a lower benefit today if you had to change a life event. Lastly, let's talk about RMDs. And specifically, we're going to talk about RMDs to people who inherited somebody's IRA January 1st, 2020 or later, not the ones before. So there was a lot of confusion when this Secure Act came out at the end of 2019 and went into effect in 2020. So if you inherit somebody's IRA, other than a spouse, we're talking about somebody who has over a 10 years age difference, right? Between, just say you inherited your parents' IRA, and obviously a difference of 10 years between their date of birth and your date of birth. Now the new rule is you have to take that money out within 10 years. Before, you could stretch it out over a lifetime, but that's not the way to do it anymore if you're over 10 years difference. Again, spouses don't qualify because you treat it as your own. Or if you're within 10 years difference, like I have a client who inherited her sisters and they're only a few years apart, she's called an eligible designated beneficiary, EDB, so she can still stretch it out. But for those people who are 10 years difference, there was a lot of misinformation on that law, and the IRS wasn't very clear. They did make it more clear this year. So people thought they didn't have to take anything out within 10 years. They figured they can just let it grow, let it ride, and that last 10th year, make sure it's all withdrawn. And so people weren't taking out their RMDs, assuming you just could wait, and that's what the interpretation of the law was. There's been some more discussion on that and interpretation of that, stating no, you were supposed to take RMDs if the person you inherited that IRA from passed away after January 1st, 2020 or later, on that day or later. So for those people who missed those RMDs from 2020 and 2021, the IRS will forgive you of missing those RMDs, and they won't penalize you. It's a 50% penalty of what you're supposed to take out. So if you were supposed to take out maybe $10,000, could be a $5,000 penalty. But they said they are waiving those penalties, and they're not forcing you to take out those required minimum distributions for those missed RMDs from 2020 and 2021. If you don't take it out this year for 2022, they are going to start penalizing people in 2023. So make sure you stay on top of those required minimum distributions for those inherited IRAs if you inherited it January 1st, 2020 or later. Please hit like and subscribe. We want to get you some more good information, and give us some comments and feedback on any of these videos.